Well, good afternoon, everyone. I named this video Freefall Friday, and that's happening on both sides of the Atlantic. Maybe a little bit more so in the UK, where the market certainly didn't like what our new Chancellor has proposed. As you can see, the S&P a whopping 62 points down from yesterday's close, which was also a big down day. On VectorVest, the parameters are stretched on the downside with our buy-sell ratio right down at 0.05. And that's reflecting 5,000 companies odd in the American market on a sell recommendation and only 283 on a buy recommendation. And that means that we've got a very stretched market to the downside. The market timing indicator at 0.43, anything below 0.65 indicates a mega oversold position. Nevertheless, it may be mega oversold, but it can certainly fall further. And I see very few people coming in and supporting a market until it at least hits the June lows. I'll show you the chart in a second. I haven't had any US positions in stocks for some months now, and I'm glad of that. And I'm right down to about 25% invested in UK stocks, and even that 25% I'm going to have to look at very long and hard this afternoon, or certainly on Monday morning. So I've done quite well short of the S&P 500. I'll show you that in a second. So if we have a look, this is the SPX. That's a daily chart of the SPX. And this is what it is showing, folks. These are the VectorVest proprietary medium-term signals. And that medium-term signal has been down for quite some time now. So there was absolutely no excuse to be in this market, or if you were in the market and sweating it out, there was no excuse to be taking new positions. So the signals have been good. There's one signal that didn't work out. What can you do? But this signal from the 19th of July was great, and certainly we shouldn't have been taking any new positions from the 29th of August, I suppose. So that's nearly a month ago. The stochastic daily stochastic is in fact showing a double bottom here, which is a good sign. But the weekly stochastic, I'll put that up in a second. The weekly stochastic, which I've used to forecast this move with the VectorVest regulars, let's put it up over a year's fine. Let's take the signals off. DEW off. Let's take the moving average off. Get cluttered charts. This was falling, and that was rising, and that's called reverse divergence. Some people call it a slingshot. It rarely lets you down, and as you can see, that in fact predicted this strong high momentum move to the downside. My day trades based on short selling, I haven't had a bad one in a long time now, and that's got very little to do with me. The market was falling, and the market pulled me out of trouble. Don't worry, the clusters of bad ones will come back again. The stochastic here hasn't quite got down into a mega oversold situation, and invariably it takes on this 8-week stochastic, you see a situation like this at major turning points where it'll make one last push down, and the old stochastic will in fact not be able to go there. And that's what's called normal divergence. So we've got two types of divergence on the chart. Normal divergence, reasonably well known. The reverse divergence, not well known, and a lot of people find it incredibly difficult to tell the difference between the two. I suggest you work at it, because there is no indicator or pattern out there that determines the future as well as a slingshot or a reverse divergence. So maybe a little bit more. There's the June low, and the bears are making a case for the bulls are making a case for a double bottom down here, and then all this is over. Clearly, the bears are saying that this is the first leg down. This is a rally, and we've got another leg down the same size as this. There's certainly an awful lot of fresh air below these levels, as you can see. And if you were to draw a fib from that low to that high, we could certainly, David, you could certainly see the 50% retracement, and the 62 is down around here somewhere. So it can certainly get down to 3.3 odd before this is over. So I don't know what's going to happen next. Nobody knows what's going to happen next. All we can do is manage our positions well. In the US, I haven't got any, and I'm doing my best to make a living shorting the market on the way down. I'm still watching a trade long in gold, but nothing's happened there, and gold is sold off. So if we now do have a look at the overnight market, that's the overnight market. That's a 1 hour chart. And I've been chasing points in this. This is the FOMC. I didn't do anything in that, although it fell beautifully. You can see the tail on the candle. It fell beautifully. I was hosting a webcast. I just didn't do anything. And it's not my sort of cup of tea anyway. I'm after a couple, 200 points a month, and I can get that quite easily. Well, I wouldn't say easily some months, but I can get it quite easily by taking some selected, relatively risk-free trades when there's no major announcements around. Yesterday afternoon, I was short from 3783, and I covered at that low, 3750, and that was 30 points. And today, well, I went short there at 3740, and I covered at 3708. I'll show you the reason why I covered that. That was another 30 points. So that's 60 points, and that takes me to 140 for the month. So I've got 60 to go. If we have a look at the 4 hour chart, the 4 hour chart was clearer because the 4 hour chart overnight charted what I refer to as a multiple inside pattern. That was a bearish pattern. Up, doji, down. That's called an evening star. And then we had this two inside bars, and it broke at 37.47, but it broke too early for me. Your humble correspondent was still abed. So I then saw that when I hauled myself out of bed this morning, but that was the initial break there. And I wasn't up for that. No, that was the initial break here at 37.47 odd underneath these lows. But I actually sold that low, which happened in the 8 o'clock bar UK time. So if we actually put on a fib, and just remember, folks, we're in this to make money, not to spend our time working too much about targets. But if we put a fib on there, you can see that I actually calculated this morning at 3709. I think if you look at some of the other charts, that was the anyway. I got out at 3708 this morning, just down there. Well, whenever that was 11 or 12 o'clock. I'm feeling quite good. I got out there. And it can still fall through the floor. Nevertheless, my 30 points are in the bank. If we have a look at a bigger fib now, we can actually see that we run from here to here. That's the 1.618 extension of the pullback, just there. And that would have been a great, if you had shorted it up there and you'd managed to escape this volatility by ignoring it. That would have been difficult. That was a good level, and that's why it hung around there for such a long time. And we're now down at the 2.618 extension of this move. So I reckon that it can go to the 4.23, And 3.618, well, I don't find much use for that one, but it can certainly go to the 4.23 in a very, very weak market. But I think it will bounce here, and I'm quite happy to call it a week. It went down as far as that's sitting 3.6, went down to 3.688. The FIB level's at 3.688. And that's exactly where it went to. So just remember, we're in the market to make money, not to stress about Fibonacci levels. But if you want to leave your computer, they give you some really useful levels to actually exit positions. So while I haven't had any positions long in the American market, I've done my best to generate an income by actually shorting it. And the trades have gone well, not because of anything that I've done, but because it's been trending very strongly indeed. If the market starts to go into a range or whatever, then I'll struggle and have it's always like this. You have a run where you get 7 or 8 winning trades in a row, and you think you're God, and then all of a sudden the market goes into a mood, and whatever you're doing just doesn't work, and you have 3 or 4 or 5 bad ones in a row. And we had Tom Hogarth at our meeting on Wednesday night. That's what I was hosting that when the FOMC was happening, or at least the advice, the press conference was on. And Tom spoke to our members about keeping your losses small and adding to winners when you're in fact correct. Very motivating talk. And so keep your winners small, keep your losers small, should I say, and then do your best to let your winners run. That trade for me today wasn't a great risk to reward, but it wasn't bad. I shorted at 37.40. The stop loss was about 20 points, and I got 30 points out of it. So 1 to 1.5, not bad for a day trade. I would like 2 to 1 or 3 to 1, which is more in common with the swing trading arrangement, but I'm slowly but surely clocking up the points. So folks, Monday afternoon, I'll go through the entire market. I'll look at stocks on both sides of the Atlantic. I'll look at gold, I'll look at oil, we'll look at commodities, platinum, silver, etc. And then we'll do our best to analyze UK stocks and your UK stocks. So anybody that's not a VectorVest member that wants to come along, then just send me an email, david.paul@vectorvest.com, and I'll send you a complimentary invite. Many thanks. Bye-bye.